companies, challenges and opportunities, we have Ms. Sangeeta Mohan, Director, Asset Management, SAMHI. Ms. Mohan will be joined on stage by Mr. Raghu Sapra, Assistant Vice President, Hospitality Business, Embassy REIT, Sahiba Chait, Vice President and Senior Counsel, Marriott International, Varun Hooja, Partner, Machan Resorts LLP, and Vikramjit Singh, President, Lemon Tree Hotels. Ladies and gentlemen, the panel will be taking questions throughout the session, so I urge everybody to please pose the questions on the conferencing app. Thank you.
These are some people out there.
So we on? Should we wait or?
Yeah.
Okay. All right then. So here we are discussing the challenges and opportunities in the hospitality sector. Much has been said in the last 2 days, and we are here to discuss in-depth discussions on some controversial, some conflicting, and some ongoing issues that we've seen. Quickly, I'll ask each one of you to introduce yourself for 30 seconds, and we'll take it on from there. Vikram?
Hi, my name is Vikram. I work with Lemon Tree Hotels, and great to be here.
Hi, I'm Varun Hooja. I own and operate a hotel outside of Bombay. We run a luxury boutique hotel called the Machan, and it's a pleasure to be invited to something so prestigious.
Hi everyone, I'm Sahiba. I work with Marriott International. I've been with them for 10 years and I work in there. I'm the only lawyer on the panel, I think. So, yeah, that's me.
Hi everyone, I'm Raghu Sapra. I work for Embassy REIT. We're a commercial real estate REIT and hotels are part of the REIT as well. So I do asset management for the hotel portfolio there.
Lovely. So I'll take this first question with you, Raghu. You're the first successful REIT in India. And you have two classes of business. One is for the office stock of business that you have, and the other is for the hospitality sector. How different is asset management in this space? And probably we'd like to hear this perspective of how office space demonstrates your hotel growth or hotel growth demonstrates your office space.
So, our larger asset class remains commercial real estate. Hotels is the complementing business in our tech parks. Our thought process remains that in these larger tech parks, all these global tenants require hotels as an amenity. And that's the reason as a company, as Embassy Group, and then Blackstone as our sponsor as well. And then with the REITs now, we ensure that we are providing those amenities to our tech park tenants. It's more like a requirement, and we feel that that helps us attract larger multinational talents into our office parks. It's a complementing business for us.
Okay. Okay. Coming to the decision making, I'll take the next question with you. You have a relationship of equal with an operator here. There is one business you own and operate. You're in full control of that business. How does this decision making work in an environment where you have an operator, there are disagreements on various fronts? How does that work for you?
So we actually believe in the operator model quite a lot as a company because while there is, as individual owners, you would want control of your assets, but we believe as long as there are strong strategic inputs with data backed up provided to your operator, and there is regular engagement, there is no reason why the operator should not be able to perform within the parameters of the management agreement. And that's why that accountability is extremely important with the operator. So we believe that in long term, if you are providing clear strategic inputs to the operator and doing your part of the bargain as well. See, all these management agreements are long-term management agreements. And it's like a marriage. Both parties have to ensure that this marriage works. Mm-hmm. And it's not just the operator's responsibility, but the owner's responsibility also to make sure that this marriage works.
That's a politically correct answer. You're playing it safe now. So I'll take the next question with Lemon Tree, adding to the decision making that he was mentioning of. You own and operate. How different are you doing in a post-COVID environment to your pre-COVID operations?
Everything has changed. The world has changed. I think we've become smarter, leaner. You know, I don't want to talk about cost savings in COVID because the whole world's spoken about it. Every conference, you hear about it all the time. But there's one thing I want to tell you here. Whatever be the learnings that we've had from COVID, in terms of cost, in terms of the way we run our hotels, in terms of the way we take care of our guests, you know, a big pity will be that tomorrow when businesses come back and I see a revival stronger than ever before, we forget these learnings and we go back to our pre-COVID days, our pre-COVID practices, our pre-COVID cost structure. That will be a pity. So, you know, that's the big learning that we have from COVID, is not to go back to the pre-COVID days.
Sure.
So if I may, right, yeah, just putting back, now that's where the brands have to be held accountable.
Of course.
Right? That what has changed after COVID and what changes are they making in their operating practices, standards, etc., to ensure that we have learned something out of COVID, don't go back to the same cost structures as well. So I think so that's where the brands have to step in, and it cannot be business as usual 6 months down the line once we are back to pre-COVID numbers or so.
I was actually making a pitch to you for your next asset, Raghu.
Okay. Sahiba, management companies generally do not want the owners to interfere in their day-to-day operations. And owners, meanwhile, worry what the management is up to because they only feel that they are little incentivized to the owner's interest. And of course, there's a vested interest in the business because they like to control the GM's decision. Mm-hmm. What do you think stands true out of this, and what is most practical in the coming quarters where we will be in the recovery phase?
Right. So, you know, I think we believe that running hotels is a very consultative process. I think you can't run a hotel without the owner's input. You know, your management contract may say that there's one person in the driving seat, but in practice, it's actually that you're working with the owners, you have their buy-in, you have alignment in terms of vision, in terms of what you ultimately need to achieve, in terms of performance of the hotel. So it's not like it's running in isolation. It's always a consultative process with the owners. To give you an example, right through COVID, at Marriott, at every step of the way, we facilitated dialogue with the owners. We kept them updated on business strategies, what are the measures we were taking to manage and come out of COVID. We did virtual webinars with them. I think month on month, the operations team was out in the field meeting with them, trying to figure out how to manage the crisis. We made, you know, there was flexibility in terms of reserves, and you know, we delayed brand implementation of brand standard implementation. So at every step of the way, I think we have to work with our owners. We're partners. As we said, it's a marriage. We're not working in isolation. And I think we are, as we go forward, that is always going to be the case.
Did you face any challenge with any specific owner? You don't have to name him or
no, I don't think so. I mean, I think if anything, the survey that Hotelivate did, right, said most of the owners were quite satisfied with how the operators were present during the entire crisis. So that is a testament to how the relationship and the trust has deepened and strengthened through this crisis.
Sure. Varun, now, you know, I've understood from an asset manager, a lawyer, and an operator, you are full of it. You self-manage. How does that work for you? Is that a challenge in place of no operator, no brand? I'm sure that's the biggest challenge for you, and how do you overcome that?
So we chase our own tails, right? So we're managing, operating, doing everything in-house, right? So if you're doing that, then you're not only bringing up your own challenges, but you've got to sort them out, and you've got to sort them out quickly. I think the one advantage I would point out is agility, specifically based on size also, size and scope. If you have the ability to take decisions in an agile and quick fashion, that enables you to do what you might over a longer time frame and a much more constricted time frame. And I think that is an advantage that one would like to even keep as part of your firm, even as you grow, right? So as we look to expand now and we move from one destination to hopefully a plethora of destinations across the length and breadth of this beautiful nation, we'd like to retain that nascent ability to take decisions and be agile and quick about what you're doing, because I think time is of the essence right now, right?
Okay, sure. Vikram, just adding to that, you also have a portfolio of managed hotels. How do you probably have a differentiator for the operator and owner environment, and how does that relationship work?
Honestly, we don't. For us, whether we own an asset, and we own about 5,200 rooms across India, or we manage somebody's asset, the way we do things is identical. And I think the owner sees a lot of confidence in that, because if I tell him to change something in a 100-room hotel, I'm also doing it over my 5,200 rooms. So we really don't differentiate. I don't even know which is an owned asset, which is a managed asset. It's pretty much the same portfolio, and we do it the way we do it for our own hotels as well.
Sure. I'll take the next question with you, Sahiba. How many contracts you may have signed with Marriott so far?
I don't think I have a number. So I think that's
running in 20s, 30s?
I have never sat down to calculate, but yeah, somewhere in that range, yeah.
Okay, so in your rounds, or probably in your rounds with the owners where you were negotiating all the clauses, which is the most debatable clause?
So I think each owner has its specific set of issues. There are things that one owner may be more passionate about than the other. One may care more about design, the other may care more about how to spin off the accompanying non-hotel facility to be able to make more liquidity for the hotel. And some may actually care about data privacy, for example, right? So it's not a one-size-fits-all. So we have to deal with each owner differently to address their concerns to the extent that we can. And if I again go back to the owner survey that was done, and I thought it was a very interesting document, I think it listed out what the owners care about most. And I think commercially it is more about the fees, more about the territorial, more about things of that order. Not really, I don't think anyone gets into the specifics or the mechanics of the operating agreement per se. I think the relationship between the owner and operator is quite clear and quite distinct. But we deal with each owner separately, and we try to address whatever concerns they have on a case-to-case basis.
Sure. So we have a fair amount of good new investors coming on board in the operator engagement programs that we would like to understand. Is there any learning that you have taken from the last 24 months that you'd like to revisit the contract or probably relook at the terms, per se just say that the commercial terms can be relooked at? In the survey that Manav shared yesterday, the owner's priority, that clause has been missed out in the last 4 or 5 years. And probably we should be relooking at that in termination clause, where people are ready to pay extra fees to get that termination clause in their control.
So like I said, I don't think there's any one-size-fits-all. As these issues come up, we try to address them. I think, different stakeholders have different priorities and concerns. So it's a bit of a balance. It's a fine balance that you have to play. If there is a concern of that order, we will obviously discuss it, and it's more of a consultative approach than really documenting anything down, right?
Sure. How does that work for you, Vikram?
Well, I think you said it very well. It's not one size fits all. Every owner has a different demand, has a different expectation. But I'll tell you one trend which is, of late that we are observing is that today owners are very happy to work on a lower base management fee and share a larger part of the upside with you. So if I perform, if I give them EBITDAs which are above industry standards, they are very happy to share a very large part of that incremental revenue. So that's something we've been seeing of late. It's probably a COVID phenomena because, you saw near death for the industry. So that's one new trend that, and I'm sure all owners sitting here would agree with that.
Yeah.
If I give you the upside, share more with me. If I don't, I take very little fees. So that's one new trend.
Absolutely.
Sure. So
I think I've finally made my pitch to Raghu here.
Yeah, but it has to be conflicting to what the lawyer is saying here because you are also an operator on the other side.
No, Sangeeta, but for us, right, if you actually see, performance test, termination clause, area of protection for us, right? As the owner, that will be three important things. But I think so post-COVID, there is also a need to look at, listen, you signed management contracts 10, 15 years ago. The world's changed, the market's changed. At some point, there is an opportunity in this relationship between the owner and the brand to relook at certain contracts as long as it makes business sense. You know, whether it is to do with fee structure or whether it's to do with, you know, affiliate cost, whether it's what's the right thing for the asset. So I think so there is an opportunity here where most brands are, you know, losing out because, listen, in every relationship, there are a couple of pain points. I think so the brand and the owner should sit and discuss those pain points and see if they can be ironed out for the future.
Sure. Adding to that, why not a domestic operator and why international operator for your portfolio of hotels? You have 4, 2 are operational, 2 in pipeline. You've chosen Hilton and Four Seasons to be as your operator. Why not Marriott or why not Lemon Tree or why not Taj?
I'll just give you some history to this because I was part of the company pre-IPO as well. In our REIT, we've got 42 million square feet of office space. 70% of the companies are global technology companies or GCCs in that setup. When we did an operator search at that given point, we did a deep stick with all our tenants, and the feedback which came, because most of them are multinational companies, they're, you know, all of them are people who've traveled globally. And the requirement is only 2, where there was global distribution and global loyalty programs. So that was the reason for us, because we felt that worked in that location. If there is a particular location where we believe that a domestic brand will work, happy to look at that.
And Varun, whom would you choose for your next growth plan? Is it a single asset or is it going to be a portfolio of hotel strategy?
So it's definitely going to be a portfolio-driven strategy. The reason is that we believe that there are so many wonderful locations across the length and breadth of this nation that we are even personally willing to invest across the nation and ensure that we have a portfolio that's worth much more as a whole than one overbuilt out property, right? So instead of doing 250 keys on 25 acres, the intent would be to do 10 unique projects across this nation, right from the Himalayas down to the beaches, and make sure that they sort of stick with our fundamental principles of sustainability and experiential tourism. So actually, I'm quite surprised that we haven't heard much more about sustainability over the last couple of days, because I know everybody keeps on going about technology and the eminent need for that to be priority, which, I mean, I come from a tech background, so that was always the case for me. It's nothing new, in my opinion. But when it comes to sustainability, I think this is a bit of a sleeper on most people, even for larger brands at some point in time, that it's not just ESG reporting that's going to get you, but then if you are going to be, like somebody said on a panel earlier today, if you're going to be led by the consumer who is today in charge of determining what sort of experience they're looking for, and in picking said experience, the sustainability of your venture or your project is rather critical for them, then that is going to be a slight miss, I feel. And I think that the industry as a whole, hospitality globally is a giant industry where the ecology and the impact on the ecology is quite sizable, and that is something that we should look at. So, bit of a diversion from your question, but I think we try and do it in the most sustainable fashion with either a brand or bring to bear our own.
So you don't trust an operator?
Oh, no, I can't afford an operator.
Why do you say that?
I think initially it's a sense of scale, right? When you build something from the ground up, and for us, this has been more of a startup endeavor, if you will, right? It's been about a decade, if you will. You've got only a handful of rooms. You're in one location. Yes, you've woken up to the fact that we'd like to do, let's say, 3 to 5 more over the next 2 years. But as we step outward, I think we're trying to do this in a stepwise fashion where we've taken what we've learned, we've understood the margins within which we've been able to operate since you're doing it on your own, and how we now proliferate that forward. I think the time will come where, yes, we would be welcome to do so, because we do enjoy the actual build and creation of the asset a tad more than operating at times. But I think that stage will come when you've got critical mass behind the number of keys that you have and how you want to manage that across a larger brand.
Sure. A lot is said on talent management, retention, employees. We also have a equivalent session happening on human resources being the need of the hour. I have a very fundamental question to ask the lawyer first. Who should own the hotel employees? The owner or the operator?
I mean, I think the endeavor has to be that hotel employees stay, right? When you find high talent or good talent, I think the endeavor has to be that we keep them on our books so that they can drive performance. It's not just one person's job, it is both, right? Because I think that is the need of the hour. At Marriott, we're focusing tremendously on this aspect. We've got programs in terms of career development. We're focusing on mental well-being. So we're doing several things, but it has to be an initiative of both because it's not just the owner's hotel or the operator's hotel. It is our hotel, right? So we have to focus our energies together on that particular issue.
Well, we've seen that the loyalty of the employee stays with the operator and less with the owner. The GM or the key managerial positions stay with the hotel for, say, about 18 months to 24 months. And it's a revolving door. And by the next time, the new guy comes on board and he says, listen, I don't know what happened in the last 18 months. I'm here to fix it again. The objectives in this way of the owner is lost. Do you suggest, just saying even the government stays for 5 years, do you suggest that there should be a retention program for 5 years when we're ramping up? Because all our hotels are in the pre-opening phase right now. We're starting from the scratch. We are reinstating our marketing programs. We are reinstating the way how the culture will be built in. So what do you suggest should be the next way forward for this?
To be honest, I think, it's not really a revolving door, so to speak. I think when it comes to loyalty, I don't believe the GM is loyal to one person over the other. I think they're loyal to their hotel, right? And I think the objective of the owner and the operator is aligned in terms of driving performance, making sure you have an aggressive bottom line. So it's not just about loyalty, it's a loyalty to the brand that is on the building, which is owned by the owner, very clearly. So I think, again, like there's no one size fit all. As the industry continues to evolve, we see how people need to be retained, what we need to do for their mental well-being, how we need to have a dipstick in terms of culture. I think all of these methods and mechanisms are what are going to eventually lead to having higher retention.
I'll take the next question with Vikram. Talent retention is the subject that we're discussing here. I'm not quite sure if the payroll restoration is back. I just want to understand if the payrolls have been restored back to the original salaries for the portfolio.
Luckily, yes.
Thank God. So now in times like this, how difficult was it in the last 24 months to contain this discount and still drive a 45% EBITDA margin for the, for the company?
So let me just answer the salary part first. And, I think every company had a different response to the crisis. I can talk about Lemon Tree. We at Lemon Tree took a very conscious call that we will not ask a single employee to go, which means that nobody will be asked to leave, and therefore everyone had to share the pain, which meant salary cuts, it meant leave without pay, all of that. But, everyone had something coming into their kitty. Maybe every alternate month, maybe 15 days a month, whatever it was. So that's how we, that was our response to tide over this crisis. And, touch wood, things are back and everything's back to normal. Everything's restored. We've in fact announced increments and promotions now. So,
okay.
So that's out of the way now. But
sure.
Talking of your other question, which is payroll cost, let me tell you what's happened in the last 2 years to the industry. We've had a lot of people leave the industry. The new guys don't want to join. I think I was having a long chat with Dilip Puri. I don't know if he's in the room today. But a lot of people, who are joining hotel schools today don't want to pursue a career in hotels. What they've seen in the last 2 years, whether it was, whether it was salary deductions, whether it was those long working hours, whether it was the fact that, it was gruesome. The last 2 years were really bad. And I think one problem that we will all face as, brands, operators, owners going forward is to get talent and manpower for the industry. It's going to get more and more difficult because the generation of today don't want to work 14 hours a day. They're not interested in, standing behind a reception desk for 12 hours a day. So that's a problem that we are facing as an industry. And it's something we all need to resolve going forward. How we do it, is a long conversation.
Are we good paymasters? Is it the reason that it is holding back on that front, and there is no hiring or rehiring happening in that zone?
See, hotels don't pay well. But I think the way to look over this, the big problem is that, you've got your wage bills. But we as an industry, a very large part of our wage bills are fixed. We've not looked at variable wage bills. Yeah. You look at retail, look at insurance, look at finance. 50, 60, 70% of their take home is variable. So I think that's one model that we as an industry should explore. We should look at it very seriously, because that's the only way you can reward your high potential, high performers, retain them, not send them to another industry. So that's the way I think we are trying to approach it. We don't have a solution yet, but like I said, that's the methodology that will probably work. Because you really can't take up your wage bills, you see, beyond a certain point.
I just want to supplement that. I think it's also very important to focus on employees' well-being. Their mental well-being is a very important aspect.
Are we imbibing that culture back in the operator environment?
I think that is where the push is, because we recognize that's the only way to retain talent, right? I think when you talk about employee well-being, it's not just about the compensation, it's not just about the salary, but it's actually, do people feel invested in this organization? And I think that is what is going to drive people to come back. So culture needs to be front and center of retaining talent as well.
So I'd like to add to that actually. So for somebody like us who's more of a micro organization, right, these factors or these issues can get compounded, right? Specifically trying to garner great quality talent amongst a very crowded marketplace that is really waking up, and there's a big resurgence in hospitality now. Everybody's jumping around, a lot of hiring happening, right? For a firm such as ours, right, so culture plays a very, very important, not just fitment from employee and employer perspective, but from the longevity part of it, right? So you can cut a check that's slightly larger than the next person over, but how long is that going to tide you over? So we look at trying to build the employee's life within the firm, taking into consideration things that are just more important than just I drive from point A to B, I come to work, I do what I'm good at, and then I go home, right? Does it matter, again, for things like us, does it matter to them that if they came to work every day, it helped the environment in some way to say, for instance, all our corporate offices are working only on 100% green energy, right? We are well on our way by the end of this month to be 100% carbon neutral as a firm, right? Mm-hmm. So that's something new that we're doing, and then we find folks that either from hospitality or even from other fields, if this is something that...
So are you paying extra monies just for the retention, because you are now competing in a space where you have an operator environment, which is more disciplined, there is a career progression path, there is learning and development module. How is that in your environment?
So like I was saying, right, the paycheck is certainly one major aspect of it, and we've come around to the fact that since we're owning and operating, we've been able to put away sizable aways, and we have the right margin streams, etc., to be able to afford that now. But that's not the only thing, right? Like you said, it's career progression. Where do I go from here? So now we have a story to sell you. Yes, we're going to be doing 5 more units over the course of the next 3 years, but over and above that, we're trying to get people into the firm that are going to believe in what you stand for and what you are about to achieve over the course of the next few years, let me put it that way, even in the short term. And it's those folks that kind of believe in that are the ones that we find kind of stick, right? Sure. So when you get your 2, 3, 4 years going in, then there is, you've bought into it, right? And then those folks were able to retain for a long while.
Sure. We'll take the audience questions, if you could just get them on the screen, please. The first question, I'm sure you guys can read the screen. So the single most important change to each of your companies which has come from the period of crisis and here's to stay. Raghu, you'll take that.
Two things, it's not one. I seriously believe that the industry is behind in imbibing technology. There was a lot of discussion this morning. I think so we're 10 years behind.
Yeah.
If not more, we're 10 years behind in imbibing technology. The world's moving ahead. We need to do that at a much faster pace. And unfortunately, it's a fact, the brands are not ready. It's a fact. We as developers want to put in money into technology, but the brands are just not ready, unfortunately. B is do more with less, I think so. That's extremely important after COVID. That's biggest learning.
Vikram, you'll take the next question. That's
Not at all. I can probably think of one example, which is our founder and our chairman, Patu. He never went to hotel school. He's a IIT Delhi and IIM Calcutta alumni. So I don't think you need to go to a hotel school to be a hotelier or to run hotel operations or anything of that sort.
ask Varun how he's doing it without being a hotelier.
So I went business school. That kind of helps. But I think, to your point, I think it's a very passion-centric industry, right? It's all about people contact. When we went about even setting this up, our goal set was if this experience that you're laying out for your guests would be sort of palatable to you, would be something that you want to experience, then that was the benchmark we set for ourselves. It wasn't really A does A and B does B, so we must then follow in turn and then do C. But I think it's just very people-centric, right? I mean,
It's the person.
yeah, it's the person, yeah.
Sahiba, you'll take that question, then we'll go on to Raghu. As a lawyer for international. I'll read that question for you. As a lawyer for international operator, how do you negotiate when the owners negotiate rigorously the management agreements, and which are basically the global templates?
So I think, like I said in the beginning, I think it's not a one-size-fits-all. I mean, owners have issues that are personal to them, and we have to deal with each negotiation on a case-to-case basis. There's no hard and fast rule about how things are going to be done. I mean, the management contract sets out the basic fundamental relationship between the owner and the operator, but there are gray spaces, right? And we have to, reality sometimes is different to what you've got in terms of the contract, because that's just a framework, right? I gave the example of how we reacted during COVID. Now, we didn't put those things into the management contract when we put them, when we signed them, but the business need of the hour was slightly to deviate from that. So that's how we deal with, negotiations, and how we deal with business in reality.
Adding to that, do you think the owner community should make any amends during this process of negotiation? From an operator coming to a purely an owner, you prep him before we get into this?
So to be honest, we've had no issues in terms of negotiations, right? We've been able to sign at least 129 or 130 hotels, right? We've got 50 more in the pipeline, so that's a testament to the fact that this happens, right? We sign deals all the time, right? So there's never been an impediment to signing, to closing. I think we try to meet within the framework of what is set up. We try to address the concerns that each owner has.
Sure. Raghu, you'll take the next.
To Raghu, what is holding back REITs in India? Actually, that's a question for Mike, who's our CEO, who's on a panel this afternoon, but I'll take part of it. We've already got 3 successful REITs in the country. This medium of investment is very common in the Western world. We believe in this. We believe it's a secure means of investment for institutional and individual investors as well. We distribute our earnings every 6 months. In our case, we distribute every quarter, and we distribute 90% of our earnings. We believe as in a more institutional real estate money comes into the country, REITs, you'll see more and more REITs coming in.
Sure. Vikram, the next question is yours.
So I have a very contrary view to this here. And I thought I'll share it here, and please feel free to contradict me on this one. But, see, the last 2 years, the growth in the leisure segment was driven by a change of behavior. See, international borders were shut. You couldn't go out of the country. No one was working from office. You were working from home. So you could actually go park yourself in a nice environment, clean air, good temperature, anywhere in India and work. You could take holidays because it didn't matter where you were physically. Starting April, and I hope it continues, offices are opening. People are now going back to work 5 days a week, some 3 days a week. But I think, 3 months from today, 6 months from today, when COVID will be completely gone, when you're back to working 5 days a week, when everyone's going to office, I don't know how many more holidays and this leisure trend and international borders will open, and it'll be safe to go abroad. I don't know the leisure growth that you've seen in the last 2 years, will it sustain? I don't know.
That's a challenge. That's a big challenge for us now.
So therefore, like I said, this is a wait and watch for me, if you ask me personally.
But I think so leisure is here to stay. Probably not to that extent, but people are looking for experiential travel. People are looking for long weekend getaways, and people are willing to spend money on that as well. So I personally believe it's here to stay.
Yeah, I mean, that's how we survive, really, right? And it's not just weekend tourism, right? Because every Tuesday is somebody's birthday, every Thursday is somebody's anniversary. And I think the one thing we shouldn't ignore is that even the well-heeled domestic tourist today, I mean, he's been all over the world, eaten at Michelin-star restaurants. Even so, he's not necessarily going to want to fly to Dubai every weekend. He's going to want to do something in the vicinity or take advantage of just, a day's hop in and out. And I think it's very dependent on being appropriately placed geographically in the nation for leisure to work really well for you. If you are pure play a fly-in market, I think yes, you will tend to find more flux. But if you are around major metros within drivable distances, I think you'd be able to retain some amount of that impetus that you've seen right now.
Correct.
Sure. Vikram, any thoughts on the location and accessibility that he spoke
No,
of?
like
the
I
leisure
said,
markets?
it's a wait and watch, and I agree, the volumes will probably not be the same, but I think people have learned this, people have gotten this habit of taking holidays, and one interesting trend is staycations, you don't necessarily go out to another leisure location, you're taking holidays in the city that you live in.
Yep.
And it's a very large part of our business, it was for the last 2 years, for our city hotels.
And I think aspirationally too, right? Like the Indian mindset and the aspiration of the Indian consumer today is to move from, let's say, mid-market to leisure destinations. So that is going to be a big impetus too. I mean, we're a population of 1.4 billion, right? And hopefully that is going to help keep the travel industry in a very kind of bullish way.
Did you travel most of the times during your work from home mode?
Yeah, absolutely. Yeah, and I think everybody did. So.
No, I was going to work. I think so, with domestic airline demand going to just keep on increasing year on year, and the overall domestic demand in India over the next 5 to 10 years is going to boom. And we as an industry need to make sure that we take the right steps to harness that demand. I think so that's extremely important. We have to ensure that our hotels are ready for this domestic demand, and we're communicating and marketing to the right audience in this domestic demand.
Sure. Vikram, you've got the next question on board.
Which one is that?
So what is the development strategy for Lemon Tree Hotels? Are there any sub-brands coming up or plan to acquire a portfolio?
Okay. I hope no more. We are still trying to integrate our latest acquisition, which happened just before COVID, which was the acquisition of the Keys portfolio. But, Lemon Tree, when we started, we didn't really have a brand. No one knew Lemon Tree Hotels. So for us to build a brand and eventually go asset light, we had to start asset heavy, which is why for the first 7-8 years of our journey, we only built assets. We owned all the assets that we had. Because for us to go to people and show what we are, because we weren't the Marriott or the Hilton, no one knew Lemon Tree. So therefore, we went asset heavy to go asset light. So going forward, there is only one hotel which is being constructed, which coincidentally could be one of the largest hotels in India. It's a 669-room hotel at just outside the Mumbai International Airport. But barring that, all development, everything is now going to be asset light. We are very, very enthusiastic to be in this space. We are relatively new in the, in the asset light space. But going forward, that's the strategy, and we are trying to approach it very aggressively here.
Sure.
And just to add to that, I was reading a survey which said that 55% of all hotels which were signed in 2021 were actually mid-scale hotels. So that's very heartening for a mid-scale operator like Lemon Tree to know.
Interesting. Raghu, would you like to take this?
Yeah, Raghu, can
And
you
then
give us a
probably
sense of the challenges with perhaps specific to mixed-use development? Interesting, you know. We just admits opening a 619-key dual-branded 60,000 square feet convention center hotel at Manyata Tech Park, which is a 14 million square feet tech park, the largest in Asia Pacific as well. And as someone said, 600 keys in the earlier panel is a labor of love, right? So, so there are challenges, right? There is a flyover integrated to the hotel. There is a retail plaza attached to it. In one of our future developments, there is a metro station attached to it. So the larger challenge is, what is the overall strategy of the company? What do we want the hotel to achieve with our tech park? And we ensure that we customize our product offering, our brand offering, our positioning offering for hotels to that. And we're not just building that just as a standalone, but it is able to cater at least to 50-60% of the park requirement. Of course, there is catering from outside as well. But yeah, but from a project perspective, it's more challenging because there is humongous amount of integration which is required.
Sure. Let's talk markets now here. Markets for us is mid-scale, upscale, and other zones. Tell me, has the perception of the mid-market segment of the consumer behavior and also of how hotels are operating changed in the last 18 months? I'll take that first question with you because you have a large portfolio of mid-scale.
See, like I said, I think the perception only changed for the positive. I was reading the HVS Analog report. About 15,500 rooms were signed in 2021, calendar 21. 55% of that was mid-market or mid-scale, as they classify it. So that's a very positive sign. And I think, why are people signing mid-market hotels? Why are owners building mid-market hotels? It's obviously because the perception has changed. In my view, I see a big shift from the unbranded to the branded. And I think the biggest beneficiary of this shift will be mid-market hotels. So I think it's good days ahead.
Raghu, what about you? Not thinking of any mid-scale brand coming to you?
Totally location-based. You know, in our two tech parks, we have two dual-branded hotels, which is upper upscale and upscale. We've got tech parks in Pune and Noida as well. Should we ever do a hotel there, and there is a requirement for a budget and mid-market, happy to consider that. It's for the location, what makes business sense for us and for our tenants.
Sure. Adding to that, you know, as per the REIT guidelines, you guys are a transparent vehicle where you have to transform spaces either into an office park or a hotel base. What is the approach while you're choosing this two asset class? How do you go about it? How do you know that this is my gut, that the hotel is going to do well in this land parcel or probably a land use of that?
We've got enough consultants around to do feasibility studies for us. But I think so. It's first of all keeping your ears to the ground and understand what your tenants want, right? Most of our leases are long-term leases. They're no short-term leases. We want to get hotels to our tech parks so that our leasing teams can ensure that they're getting long-term leases too. They're getting larger leases which are upwards of close to 500,000 square feet to 2 million square feet. So there is a lot of analysis which goes in, right from office space requirement, how office space requirement is going to increase in the future, how does the hotel demand which is going to come with that office space, and whether that tech park really requires a hotel as an amenity. See, all our tech parks are like mini cities, right? We've got food courts, we've got some amount of retail, we've got creches, we've got play arenas, we've got gyms, we've got hotels. Yeah, so there is, so it is to create the total business ecosystem, and that's where our hotel strategy comes into our tech parks.
Okay. So do you think the leisure business is here to stay for long? Or,
Yeah,
or are you going to back your underwriting on the corporate market that you will be investing in?
So I think so it's location to location. City hotels would continue to back on corporate demand. I think so the weekday, weekend demand will come back in hotels. In cities, unless we create great leisure destinations or shopping destinations, I do not see that amount of leisure demand coming back to. So we're not a Singapore, right? Bombay is not a Singapore that you're sold out Monday to Wednesday on corporate, or Monday to Thursday on corporate, and Thursday to Sunday on leisure, or a KL or any other, say, or Hong Kong. So that's not going to happen in our city hotels to that extent until there is some city-wide event or something. But all other tier 2, tier 3, any destinations, anything which has got experience, people want to do that in today's date. And the younger generation wants to do that. The kids want to do it, and we have to see that, how's it going to be. The kids who are currently in their teens, they're going to be traveling in 5 years from now. We need to be ready for that. And what do they want? Someone has to think about all this and start working on it today, that we are ready, future ready in 5 years, 10 years from now.
So, I mean, I'll jump on the back of that. I think with leisure in particular, with the changing audience mix, right? They spoke about this earlier today. They said, hey, we would always look at folks in their 40s and 50s and say, this is your target audience, this is who's traveling domestically, and so on and so forth. But that's changed drastically. Having said that, and you mentioned this, leisure travel is also becoming extremely aspirational. Folks that would have a budget constraint, perhaps, today are leveraging fintech and all these other various opportunities to say, I'm going to double down on my budget, but I'm going to go to this quote-unquote Instagrammable place, and that is what I want, and that is how I must celebrate. So, tangible physical gifts versus gifting experiences is another thing that's also driving boutique luxury travel for sure, because that's the realm within which we play.
So just adding to that, just instant gratification, right? We spoke about this at one of the panels earlier.
Yeah.
Millennials want instant gratification. What better place to do it than a hotel where they can actually create an experience and have a memory, right? That's what is going to be, what's going to drive occupancies at hotel in the future.
And
Sure.
technology. Again,
Of
come
course,
back
of
to
course.
technology.
That's the opportunity that we're looking at. Adding to that, do you see institutional capital coming your way in the leisure zone? Do you see more of these investors from that space coming to you? Because now you're a brand, so would you?
I mean, perhaps. But yeah, from institutional capital, I think within the space, absolutely. There are a lot of succinct luxury-only brands globally that operate within that space. Six Senses of the world, et cetera, what's happening now in Ranthambore and around the sanctuaries, a lot more really high-end, luxe-only, 1.5 lakhs a night kind of experiences are all coming about, and they fill up. And I don't think that's just folks that are missing out on international vacations. I just feel like the ability to spend in hospitality, we're underestimating what the domestic consumer has in his wallet. They are willing to spend copious amounts of money over a weekend, and I think that space is maybe slightly underserved because we might be too many 5 stars in cities, not enough of these experiential outlays or chalets out in various places where the leisure customer actually wants to go, right? Like you, Raghu, just pointed out. I mean, why would I come to Bombay for vacation? It makes no sense, right? But you would probably spend that dime going somewhere else where you felt, this is up in the Himalayas or out in the woods and so on and so forth. And that, I think, so there's a lot of value in that space, and I do think it will draw in institutional investors.
Sure, we'll take a couple of those audience questions which are pending. Can we have them on the screen? So who'll take this? Vikram, go ahead.
Dekho apna desh. I think out of compulsion, with international borders all locked up, I think a large part of India has seen apna desh. We've all seen India like never before. And, some part of it is here to stay because it's a change of habit. So people will take more holidays. People will continue to get away on weekends. I can't talk less about it, but I think the staycation business is here to stay, especially for business hotels. cities, people are actually, checking into a hotel over the weekend, spending quality time with the family. So that's really a trend which I think will continue. So that's probably my take on it, yeah. But like I said, leisure will definitely see some impact when borders open up, when you are working in an office 5 days a week, you can't travel out so much. So one's got to wait and watch and see what's the real impact and what will this eventually settle down at.
Sure. Sahiba, would you like to take that question? What are the challenges preventing franchising from picking up in India?
Sure. So I think there are no real challenges per se of doing franchises in India, and I think the key is to find the right partner who has the same, who appreciates the brand value, believes in the same values as the operator. So, we've done, and we're increasing the number of franchising we're doing. We have a pretty sizable portfolio of franchise hotels in India, and we're continuing to grow that from strength to strength. The key really is to find the right partner for us.
Sure. Varun, you'll take the next one. Any thoughts on fractional sales in leisure markets? Is India and its legal system ready for it?
You're asking?
Yes.
Lawyer question, actually.
Yeah, I know. I would defer to her.
So I'm not sure what fractional sales mean.
That's why I bounced it to you.
Okay, so I assume that they're talking about branded residences in a way. And if that is what the question is, and I'm not sure who's asked that, but yes, we're looking at branded residences and fractional sales in leisure markets, and I think there is a market for it. People want to buy branded residences, and we're seeing an upswing in that as well.
All right.
And legally, I don't think there are any impediments per se.
Oh.
So I think there's RERA today that regulates fractional
That's true.
sales.
That's
So I think the market is well regulated in that respect.
Varun, any global brand whose sustainability practices inspire you?
There are lots. I mean, I'd be hard pressed to name just one, but I mean, if I had to, I'd say stuff like, things that we've observed over the years, folks such as the banyan trees, etc., of the world, right? There are a lot of brands that have taken sustainability as a core competence and no longer as an ancillary requirement or a nice to have, right? That's changing. And so for brands that hold this value at a core, we love to learn and imbibe from them, and also I'd love to think this, but maybe even contribute back to the ecosystem, because we're viewing it from such a nascent perspective that we're able to take steps that perhaps they haven't taken just as yet on account of the fact that we can afford to do it at our size, right? And then as we proliferate forward, we can continue to take these sustainable practices and really keep them at the helm of who we stand for as a hotel chain or a group of resorts.
Agreed. Anyone who wants to take the next?
So I'll take that, yeah. Trust me, lots. I think what we've seen in the last 2 years is the unknown markets, this tier 2 and more relevantly even tier 3. The resilience that they've showed is phenomenal. If I were to tell you that there are tier 3 cities in this country which over the last 2 years have done higher average rates than a Gurgaon, Bangalore or Hyderabad, you'll be shocked, but that's the reality of our lives. I could name a few. We operate a hotel in Jhansi, we operate a hotel in Aligarh, Patna as a market, Siliguri as a market. You'll be surprised at the kind of performance these hotels have done. Average rates, occupancy, everything. So I think there are a lot of, Aurangabad is another example, yeah. So there are a lot of relatively unknown markets, and the performance of hotels there will surprise you. That's my learning from, our operations in these tier 2, tier 3 cities.
And I think so, Northeast, right? We just don't know anything about Northeast, right, at all.
Great. Raghu, you have the next question.
Do you think international brands are
they
flexible
really
enough
wanting
to
the
work
right
around the ground
words coming
reality?
out?
Short answer, long answer, I can decide whichever. The templates are not. So coming back to the templates, right? It's that templates done by someone sitting back home in US who's got no reality what's happening in Jumri, Dalai or Jhansi or Bangalore or whatever.
Yeah.
I think so. What's what's important is that now you've got Indian representation of most brands in India, so that's helping. More needs to be done for the brands to understand. Because a lot of brands focused on China, and they customized everything for China. I think so it's time that they start customizing their standards, their terms, their agreements, the way they operate to India. I think so India is different to China, India is different to US, different states in India are different. North India, South, leave Karnataka, Tamil Nadu is different. So I think so a lot more needs to be done. However, if you have positive communication with the brands, you explain the business rationale, we believe most of the brands agree to something which is the correct business rationale.
And how does the cost structure stack up for an international brand? I know there's a challenge of rate dislocation that we've seen across markets. How would that be compensated in times to come?
So I don't know what's cost structure domestic brand. I don't have them, right? Probably you can answer that. But see, you can analyze things in a different manner, right? Most brands would take a certain percentage of your, of your top line. As Vikram said earlier, that's just a number. We are a public listed company. We only want one thing from our hotels: performance. And anything which we do in our hotels which is not driving top line EBITDA or enhancing value for our shareholders, we don't want to have those discussions, right? Great, lovely, you want to introduce something great, but if it doesn't cover these three things, it doesn't interest us. But coming back to your question, it's the same thing. It doesn't make much of a difference there. Any brand who's willing to deliver performance, we're happy to work with them.
As you rightly used the words, revenue recovery, EBITDA recovery. At a 80% revenue recovery, do you see your hotels to be stabilizing at 100% EBITDA recovery? Does that cost model, the cost structure, the cost optimization that you may have ran through in the last 24 months, is that more sustainable for you to see as an asset manager?
So, listen, I don't want to give any forward-looking statements here at this point, but all I will say, we operate in a market, Bangalore, which was extremely badly hit by COVID, one of the worst hit market. We finally started seeing recovery from March onwards. Pace in April and May is looking healthy. That's one of the reasons, seeing these numbers, we decided to open the 619 key big box in Bangalore. We are positive that either by end of this year or sometime next year, I do not know which quarter, but we'll be back to pre-COVID numbers, provided there is no more fourth wave, there are no more restrictions, etc., which comes in. If this current trend continues and there's no blip in between, I think so by middle of next year, latest, we should be at pre-COVID number.
Fingers crossed. Vikram, in your recent interview, you spoke much about the F&B revenues coming back. Do you see F&B revenues reaching 120% of the pre-COVID levels and as compared to your room revenue at 100%? Is that going to be the trend that you're going to see in mid-scale, upscale, and various segments?
So let me break F&B revenue into two parts here. There is the restaurant business and there's the banquets business. In my view, I think the banquets business will come back stronger than ever before. I think marriages will not happen in standalone banquet halls. They will not happen in open grounds anymore. So that shift that I was talking about from the unbranded to the branded will be very evidently seen in the banquet space as well. So conferences, events, everything is going to move to branded hotels, whether it's mid-market, deluxe, luxury, whichever segment you talk about. But there will be a share shift, and a big one. As far as food and beverage, as the restaurants are concerned, I think the guys outside are doing a much better job than all hotel companies here. And it's best that we lease out spaces to them and let them run food and beverage, because that's the core and they do a fantastic...
So have you templatized this mid-scale?
We are experimenting with one, but at the moment, no.
Okay. So the offerings are very different in every lemon tree that you experience. A lemon tree in Bombay would be very different to a lemon tree in Delhi.
Not really. So we standardize it as per brand. So the premiers, Bombay is a lemon tree premier. So the premiers will have a very similar offering. The lemon trees will be different. The red foxes will be different. Keys, we are still getting this together. So it's as per brand, if you ask me.
Okay, sure. Any thoughts on your F&B revenues?
No, I think so. Coming back to catering, the rebound is stronger. We are opening a convention center so we can understand that, and we are seeing the leads which are flowing through for the next 2 years, so which is a positive sign. So that's going to come back. Weddings is going to stay. There is a pent-up demand in weddings, plus you also need to understand average age of India is 30 right now, and that's marriageable age. So a lot of people who are at the age of 30 are going to get married in the next 2-3 years.
You've forgotten remarriages here. Because the last 2 years saw the maximum number of divorces. Huh?
Oh, wow.
So I think so. Banqueting is going to come back. When will it hit pre-COVID number? It's anyone's guess at this point. Coming back to F&B, we feel that, so we opened 619 keys. We've got just all-day dining and bar in both the hotels. We believe that the standalones do a much better job. The hotel companies need to learn from these standalone restaurants. And then that blood has to come into hotels at some point.
So are you leasing out your F&B spaces to any standalone?
We're not leasing, but we're working with partners going forward who've done standalone restaurants.
Okay, so you feel Hilton is not doing a great job?
Sorry? I didn't say Hilton, right? No. It's
Okay.
not Hilton or anyone. I think so. It's an industry issue. We have to realize it and we have to fix it now, because we don't want to live for the next 2, 3, 6 months. We're building these hotels for 40, 50 years. So the right things have to be done today.
Lovely. I'll take the last question with you, Varun. A lot has been spoken about. CEOs are now the new techies, and technology is one of the opportunity space that we all need to look at. There is contactless hospitality. There are these check-in kiosks. There is micro-segmentation happening. There is AI world of things that's happening. IoT is being introduced even in the energy environment per se. What are your thoughts? Where is your capital allocation for the next 18 months?
Very heavily into that very basket itself, right? So there's no way of escaping it. Technology is going to be an imminent central quotient to our success, not just in this industry. I think it's pan-industries, right? So everything. So when it comes down to energy monitoring, we're on IoT. Water management and harvesting and recycling is also on the net right now. We can feasibly see numbers on my cell phone right now. When it comes down to even for us, so today, because of technology, smaller brands, much smaller institutions are able to do what a larger firm could do, say, 5 years ago. Today we're able to do it, whether it's your express check-ins, checkouts, having everything in the palm of your hand. We are moving to, we've already got 360-degree videos for all our rooms on our platform, on our website. We're moving to VR next. So we are taking that on because, again, like I said, it's bite-sized for us, right? We can do this on the fly. But long story short, absolutely putting a lot of time, effort, and capital behind those initiatives over the next coming quarters.
Great then, so we have come to an end to our session. Any questions, last minute questions, we are good to answer them. I guess everybody is sorted. Good. All right, thank you so much for being a participative audience here. I hope we've been able to address as many questions as we could. Thank you.
Thank you.
Thank you.